Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. I can't say enough, folks. I was drilled into you with chalk being thrown in the classroom over what's called the standard error of this statistical derby. Claudia Sahm with us now, who learned that in the crucible of University of Michigan economics. Claudia, you nailed it by saying, there's some optimism here to see, but just across the board, it's morning in America. Why do so many people not feel that way?
Right. Well, first, it's take a deep breath, right? It's good to have, we've had some really not encouraging jobs reports in a row, and this is a good one. I mean, on the surface, you always got to dig down deeper. We're not all going to feel the same way about this economy or this labor market. We have hundreds of millions of workers who have very different circumstances. There still are people out there looking for jobs that aren't finding them. They're not going to be upbeat and positive about this. And for many things, whether it's inflation or unemployment, this has been a really rough ride. So being told from a statistic that's very abstract, just some number that pops up on the screen that you should be happy, is not, right. These are feelings, not the numbers. But this is encouraging. And this, we need more of these, right? Because we've had some disappointing ones, but this is in the right direction. 10-year
real yield up 8 basis points. We've gone from a 156 to a 1.72 in 2 or 3 days as well. The Sweeney yield explodes out up 16 basis points. All you need to know is the word ginormous, 3.87%. Paul Sweeney, the 10-year yield, we're going to get to a 3.95%.
Yep. Yeah, big moves in the yield space, Tom. So, Claudia, just the headline numbers for the people that care. Unemployment rate, 4.1%. That's down from 4.2%. Average hourly earnings up 4% on a year-on-year basis versus 3.8%, actually revised up to 3.9%. So, I mean, the headline numbers for a lot of folks out there, pretty solid here.
Yeah, no, these are good numbers. This is a good report. So I'm not. Again, I'm sure
is the Fed gonna read it that way?
Well, I think the Fed also smiled when they looked at this one. Because the inflation is coming down. That is part of getting back to 2%. We're well on our way. Unemployment is low, the maximum employment, that's the other side, and then they should be out of the way. The Fed has interest rates. They are still high. You can look at interest rate sensitive sectors, and the Fed still is having an effect. It is not, their job is just to kind of keep things together. They're not supposed to be trying to push the economy one way or the other in just normal times. So the closer they get to checking both boxes on the dual mandate, great.
Dr. Sahm, thank you so much. We're going to leave it there. Really, really appreciate it. Claudia Sahm with us this morning with all her good work for economics that we've seen this year. Really interesting jobs report and a good time to speak with Ellen Zentner, Chief Economic Strategist, Global Head of Thematic Macro Investing, Morgan Stanley, their global investment audience. Ellen, thank you so much for being with us. This is a solid economy. Bring this right over to real GDP.
Yeah,
Are we 3-ish forward?
It's still 2 and change. Yeah, it's still 2 and change. I mean, if you look at this report, it's on the back of these phenomenal upward revisions last week to gross domestic income.
Yeah, Claudia mentioned that as well.
Stronger consumer spending and income growth and a higher savings rate. So we didn't even have to draw down the savings buffer in order to get that stronger spending. And where are we spending? We're spending on services. Where was the rebound in this report? In services. I think the decline in manufacturing jobs is something to keep an eye on. But this was a big rebound in services, and the services side of the economy is still strong.
Ellen, how do you think our Federal Reserve is going to view this data point here today?
well, favorably.
Yep.
It's look, there's ample room to cut, to use Chair Powell's own word. And so given that, the bar is not particularly high to go 50 basis points if the data warrant. This is not data that warrant it. Do people care about this report? I've heard that a lot from people because the next employment report released during blackout is going to matter. It can help them make a game time decision. But so far, the data flow does not. It supports Powell's baseline, which he laid out earlier this week with pretty much 25s.
And a red headline just coming across the Bloomberg terminal: traders shred bets on 50 basis point cut in November after jobs data. So maybe leaning a little bit more towards 25 here. What does this say about the U.S. economy? Because as Tom was mentioning before, you get numbers like this, and it kind of goes to a lot of folks out there who are concerned about the U.S. economy, that maybe it's a little bit stronger than we think. How do you guys think about the economy overall?
Well, look, I think this is always the case, right? We get this restatement in data, whether it's just the 2-month, net upward revisions in this report, or all of those benchmark revisions that came last week. Oftentimes these revisions can suddenly make us realize that we're sitting on an economy that is different from what we thought before. The foundation is stronger. Now, that doesn't mean that the risks are to the upside versus the downside. I think that the higher we run, the greater the risk is to the downside when companies do shift and decide they don't want the higher anymore.
Ellen Zentner with us with Morgan Stanley, so she could be with us, Morgan Stanley Global Investment Office. We welcome all of you across the country. Since Lisa Mateo gave us the numbers, there is a bid to the market. Futures up 24, now up 33, up 0.6%. NASDAQ up 0.9%. Small caps up over a stick right now. The VIX comes in solid in a big figure, 19.19 on the VIX. And yes, there is dollar strength as well. Ellen, I got to go to a bigger, broader picture here about the unknown unknowns. You've been exquisite at this for years out of Texas. And the basic idea is there's a productivity mystery, there's an immigration, migration overlay. Yes, all wrapped up in the election. Do we have any confidence within our traditional models now as we see a 254 plus revision?
So here's what makes forecasting payrolls really difficult: when firms aren't laying off. When there's a lot of volatility in jobless claims and you can see them rising and falling, it translates well into modeling employment growth. When jobless claims are just sort of low and steady, you're trying to simply model the rate of hiring, and that's much more difficult. And also, Tom, 200,000 is one standard deviation on the payroll report. So I can tell you at more than 250,000 in today's print, I'm pretty confident it was positive this month.
You mentioned, some new revisions to GDP, higher corporate income, muted labor share. This got to be good for just overall profits in the marketplace.
Productivity drives profits. This is a productivity story.
Okay.
Because you pair those revisions upward in growth in the economy to what we know is going to be a downward revision to employment when we do get those benchmark revisions. That's stronger productivity, and productivity drives profits, and it explains how margins are holding up well.
Right.
It explains the earnings surprises. It brings in a bizarre turn of events. It's bringing the economy to the markets.
Interesting.
Hey, Paul, I just did the math. Here we are. You can see this on YouTube. On radio, I'm holding up the famed HP-12C. The only reason Ellen Zentner first talked to me a zillion years ago was I showed her my HP-12C. And here's the answer.
Impressive.
The 3-month moving average, Paul, went from 116,000 to 185,000 with 254,000 plus a solid revision of 95,000. I mean, I'm sorry, revision's got the wind going here.
Yeah. So, I mean, Ellen,
185,000.
that gets your attention there, and the HP-12C cranking along still. I got mine June 16th, 1986.
I have my
from
HP graphing calculator.
Oh, that's geek. That's serious geek there.
Did you ever have
Vintage.
a Monroe Trader?
No.
I mean, you go darken Jim Caron's door at Morgan Stanley. He'll explain the glory of a Monroe Trader. Paul?
Yeah, but now we've got the Bloomberg terminal. Macro investing. When you see a print like this, when you see an exceptional U.S. economy like this, how does that how does that influence Morgan Stanley's view of the global macro investing here?
Well, I think that, there are a litany of risks out there from the global economy. The U.S. exceptionalism, right? Dollar strength.
Yep.
The weaker the global economy is, the more you're going to drive investments to dollar-backed assets. We talk about trade and uncertainty around trade. Everyone thinks that that's going to be a weaker dollar under a Trump presidency. That's a stronger dollar. All you have to do is look what happened in 2019.
DXY out to 102 right now. Euro goes under 110. Weaker euro 109.83. You pay through the nose in Dublin. I'm in Rome. It's gonna be perfect in Rome.
I know.
I'm gonna walk by Gucci and Balmain, and there'll be a store down via what's-its-name where they'll take my wallet with a weaker euro. Ellen Zentner, I want you to tell us about your new duties at Morgan Stanley with Morgan Stanley Global Investment Office. What are you doing now?
I thought maybe you would run out of breath listing out my title.
Well, they had to give you a big title.
It's lengthy.
Consultant. Yes.
It's really lengthy.
Right. Does that mean you're doing less?
I wish. I have really enjoyed being a part of the Global Investment Committee now for Morgan Stanley. Right. It's important to have a macro voice that can talk to longer run thematic trends, that can talk to dynamics around productivity and growth and how companies hire, and trying to close that gap between understanding markets and the economy.
I mean, within that, let's go right to productivity. We've got capital dynamics, labor dynamics, and I'm sorry, it's a huge mystery in our modern total factor productivity. Is it just a polarization of America into the haves of productivity and the have-nots?
Well, total factor productivity, which is the productivity from technological enhancements, that is the most difficult piece of productivity to measure. And it's one reason why when I was moderating Chair Powell earlier this week, I was trying to see how he felt about those revisions that GDP and GDI are up, but employment is going to be revised down, so that's greater productivity, and understand whether that is some sort of, post-COVID, normalization or distortion, or is it something AI? And you just can't say that it's technological advancements yet. I am in the camp of being very positive on what technological advancements from AI can bring us in terms of productivity. So I can tell you that productivity is much higher than we think right now. When we get that data, we'll see that. But I can't tell you that it's something that will be sustained.
I mean, Paul, as simple as this, if you got a run rate 2.8% real GDP, for the haves, is real GDP 3.5 or 4% China-like GDP, and for the have-nots, they're in recession? It's as simple as that.
Yeah, I don't know the answer to that. Yep.
Well, the have-nots have been in recession for some time. Gas prices coming down so much has helped buying power, but of course we'll see if this pop in oil prices is going to last, because about a 2-week lag it starts to show up in gasoline prices, and also lower interest rates from the Fed. Whether it's 25 or 50, interest rates are coming down. And while the market price is in the entire path of Fed easing, the rate you pay on your credit card moves as the Fed is cutting rates. And so with strong job gains, especially in the service sector and some of these other positives, you can put a floor under lower income households here.
I mean, Paul, what's so important here is Zentner's never talked much about she wins this trophy, this one, this prediction. She's like Steve Stanley over at Santander. They got all these awards,
all the hardware,
on the fireplace in the second living room. Ellen, you won those trophies off a view of the consumer. What is the state of the American consumer with 254,000 jobs created?
Well, with this pop in services sector, right, this rebound in service sector jobs, we see that wage gains and job gains continue to be positive for lower income groups, but they are still battling with higher rates of food and housing inflation, and wage growth is strong, but it has been slow. But they're in better shape than they were. And then the wealthy households are just on fire.
Yep.
No slowdown there.
What is the Morgan Stanley GDP call these days?
So the economics team, my former team, is still looking north of 2% for GDP.
Are you on speaking terms with it?
Of course.
Okay,
just checking.
Of course, my lovely team. Tom,
Morgan Stanley's brutal. Berner and Roach were not on speaking terms for like 15 years.
No. That U.S. economics team on the institutional security side of Morgan Stanley is number one. hands down.
Okay, we're going to digress here, Paul. And I don't want to keep. This is too important, folks. What we see with futures up 42.
Yep.
Steve Roach, with the backing of Morgan Stanley management, including Mr. Mack, invented heated debate. They're the first team I know that got off the "we are the world, we have one voice" malarkey, and they used to fight like cats and dogs. And Roach supported it. And that's the heritage that you've got.
Well, we don't need to fight like cats and dogs. We can be respectful debaters.
You haven't talked to Jim Caron.
You just like to stir the pot, Tom. You're a pot stirrer.
So, Ellen, just real quickly here, I mean, what's the next, I guess, data point that you and your team are going to be looking for here? Is it earnings coming up? Is there some economic data that you're looking for?
Yeah, I mean, earnings is always a great time to scour those transcripts and see if there's some early signs of something changing. I want to try to get a sense of how much of this activity is front-loading ahead of the election and possible tariffs and possible difficulty hiring for the holidays. And so you're doing a lot of things early here. So I want to be sure that earnings are really supporting what we're seeing in the economy.
One more question. Where are you fishing next?
Oh, gosh, I'm still fishing small stream Pennsylvania.
Really?
Yeah. I haven't been able to make it out to big water west this year.
Describe small stream Pennsylvania. I don't want to know the secret spot.
It's a 6.5 foot rod with just wrist flicks.
Is it sturgeon? What are you looking for?
Oh, no, trout.
Sturgeon.
You can't fit sturgeon in Pennsylvania, small stream fishing.
Really? I didn't
Tom,
know that.
You really don't know a lot about it, do you?
Wait, that's Ira Jersey's line. Ellen Zentner, thank you so much for being with us. I'm not going to name her title now. Mr. Peck, do something about her title. It's just way too gamely. Ellen Zentner, Thematic. Yeah. Okay, one word, Thematic. She's at Morgan Stanley's Global Investment Office. Ellen, thank you so much for being with us today. The VIX was at 20. We're now through 19, 1.57 big points, 18.92. Let me come down to oil, where I've got a 78.03. Oil ebbs back a little bit here. Of course, I don't know the time zone here. It's the late afternoon in Israel, in Lebanon, in Iran, so we'll have to see how that goes into their evening with all that horrific news. Thank you, Joe Mathieu, Balance of Power, for that Eastern Mediterranean brief.
I think people are looking at this report, Tom, and saying, all right, this economy is in decent shape. It's in maybe stronger shape than we thought. The Fed is cutting rates, but maybe not 50 basis points in the next meeting, maybe a series of 25 basis point cuts. And that's kind of what we're seeing in the market. But again, the 2-year up 15 basis points, Tom. I'm
going to go with Jason Furman, who I love his annualized work. He looks at 1 month annualized, which is, baloney, but he does it. 3 month annualized, which was my crutch for years. 6 month, 12 month annualized. 3 month average non-farm payrolls, Paul, went from 116 up to 185. Yeah, that's a wow statistic.
That's a wow statistic, and that shows the Fed that they've got this economy in a pretty decent shape.
Ira Jersey never believed in 50 basis points. He joins us now from Bloomberg Intelligence and fixed income. Okay, we're done with that silliness, Ira. What is the power of a measured 25 basis point path forward for Jerome Powell?
Well, I think, this data is going to take out any chance of 50s probably through the next 2 meetings at least, if not through January at least. And then after that, I think that this is where the 2-year yield being somewhat higher could be maintained, and that's where does the terminal rate go? Remember, we were pricing just a week ago for interest rates by the end of next year to be under 3% for the Fed funds rate. So that is starting to get repriced now. We're now around 3 1/8, and I suspect that might go a little higher, particularly if we get an inflation print that doesn't show that that inflation is moderating even further. So I think there is a risk here that this is the better scenario that we've been talking about. Like we never believed in the soft landing. It was either, hey, the economy's either going to chug along or we're going to fall in recession, and it seems like maybe that beginning one is where we're headed.
So the yield curve today, just Ira, flattening out a little bit. We get the 2-year up about 15, 16 basis points and the 10-year up about 9 basis points. How do you think about the shape of the yield curve this day? What's that telling the average investor?
Well, I think that the knee-jerk reaction being a bear, what we call a bear flattening, so 2-year yields going up faster than 10-year yields is the quote unquote proper reaction to this, because a lot of people were in yield curve steepeners. They were long 2-year notes, 3-year notes, and then market weight or underweight the long end of the curve. And so this is going to be a little bit of an unwind of that, because that possibility that 2-year yields head down toward 3% is going to be tested here with the data that we get over the next couple of weeks. But I do think that eventually, when 2-year yields get back up toward, say, 4%, that then the next move might end up being a bear steepener. So meaning that 2-year yields maybe hover 4% plus or minus 25 basis points, but 10-year yields wind up moving up higher, maybe back up toward 4.5% to 5%, but that is predicated on this data being confirmed, right? So we need a strong retail sales number, inflation, like I said, that doesn't moderate quite as much. Those are the things that we'll need to see a more persistent move higher in rates.
What's the real yield dynamic off of this? As we mentioned, we got a 3-month moving average, non-farm payrolls popping from a 116 out to 185. I get it. It's a jump condition. But what does that do to what every businessman in the country wants to know, the 10-year real yield?
Yeah, so the real yield, as expressed by the TIPS market, by the Treasury Inflation Protected Securities market, is that's a bulk of this move. So TIPS are basically the way that we measure TIPS and the way that we try to determine fair value is in large part what is the policy rate going to be, and that's why you see a 10 basis point sell-off or so in the 5-year real yield as expressed by TIPS, because now there's, like I mentioned, the a much lower possibility of larger rate cuts in the near term, and then also a higher terminal rate, right? So that's the idea that, hey, maybe the Fed's only going to cut to 4% now instead of cutting all the way down to 2 3/4.
Paul, my head is spinning. I don't know if it's a jobs report, the Mets one, or Aston Villa's destined on the continent. I don't know which.
I don't know where we go. Ira, what's next for your Treasury market here? I mean, this data point here was a big one. Where do we go from here?
Yeah, so it's going to be the retail sales and the CPI data are going to be the next big one. So when you look at the market sensitivity, it's really shifted over the last year, where it was, payrolls has always been the number one report that the Treasury market cared about. But CPI was the number that we cared about from 2021 until late last year. And that's now shifted to retail sales actually being the number 2 most important number to the market. And the reason for that is it's a sign of general health of the economy, is the consumer spending. So yeah, I think the retail sales report obviously is really going to be the next big number that the market's going to look at for how healthy is the economy.
Yeah, IRA keeps us employed. I mean, it used to be just simple. Jobs day, go home.
Yep.
And now I got CPI October 10.
Retail.
And I'm looking for, I don't have it up here. I gotta learn how to. See, Paul's the one, folks, that really knows a terminal. I mean, I don't know what I'm doing here.
Ira, what's the latest on Real Central New Jersey? Give us 30 seconds there.
We got a big game. We're playing last year's champions on Sunday night. So we're 4th place right now and hoping to move up to 2nd or 3rd after Sunday.
Are you, where you live in New Jersey, are you Phillies or Mets?
Well, we're in the brackish area in central New Jersey, right in between the two, so about half and half. Now,
so
I grew up on
Red Sox.
Well, I grew up on Long Island, so you can guess which team that I have the bias toward.
Ira Jersey, thank you for the time in publishing today. Look for that on the terminal out to Bloomberg Intelligence. Ira Jersey and his team publishing on this changed fixed income market. We're going to get to a really wonderful glass half full person, an optimist on the American economic experiment. Constance Hunter from EIU joining us here in a moment. Let's get right to it on YouTube across this nation on your Friday commute from the Interactive Broker Studios with our Bloomberg Business Flash. Lisa.
You got it. Futures still on the rise after that blowout jobs report showed non-farm payrolls rose by 254,000 in September, way above the 150,000 expected. The unemployment rate came in lower than forecast at 4.1%. Traders now cutting their bets on a 50 basis point cut in November by the Fed. We'll get to the NASDAQ futures first, up more than 1%, 253 points at 20,243. Dow futures up 0.6% at 42,589. S&P futures up about about 0.8% at 5,799. We have the 2-year yield, 3.86%. That's up 15 basis points. The 10-year yield, 3.94%. That's up about 9 basis points. Want to check in with currency. We have the dollar stronger. Japanese yen weaker, down 1% at 148.74 against the dollar. Euro, British pound weaker. Bitcoin up more than 1.5% at 61,000. Shipping stocks slumping. U.S. dock workers strike on hold. We have Maersk down about 5% in Germany. Zim Integrated Shipping down about 11%. And finally, Humana on track for its worst week since March of 2020. Wow. It announced it'll lose Medicare quality ratings on some plans. Its shares right now down about 0.2%, but its stock price plunged 22% on Tuesday and Wednesday alone. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Really want to mention dollar strength here out to 102 on DXY. We mentioned euro earlier, and I'm sorry I missed the yen move. It is titanic. Here this week, we're out to almost rounded up a $149 yen, a much weaker Japanese yen in 3 days as well. This is wonderful. She is the chief economist at the Economist Intelligence Unit. All in the industry say EIU, and the reason is they changed the world of economics in 1986. In 1986, the Economist and EIU came out with an index which, Paul, I'm sorry, in 2 Happy Meals changed economics, and that is the Big Mac Index of the EIU. Constance Hunter joins us now. You're going to be in London next week. Do you have to go to the Liverpool station with a team and they have McDonald's, Big Macs?
I think we're right by Charing Cross, so we might have to look for a McDonald's closer to the office.
Tell us about EIU. What's the value add right now? I mean, acclaimed. I've read every book they've ever published. What are you going to do as chief economist, EIU?
So at EIU, we cover 200 countries and we cover 6 industries. So we have a saying that the world is covered 65% by water. The rest is covered by the EIU.
Nice. Oh, what a branding concept.
A little branding.
Hey, Constance, you know, I saw you at CFR. The world was coming to an end, I'm going to say 7 months ago. I just got an adjusted 3-month moving average on non-farm payrolls from 116 out to 185 with revisions. Why?
Well, I think as Claudia, you had her on earlier, Claudia Sahm has been warning, right? The Sahm rule might not be indicating that the world is about to end. And we have this underlying strength. And look, I mean, the Fed move wasn't enough to change the jobs outlook for September, but I do think that this is an underlyingly strong economy. If you look at where we're going to probably print for third quarter, we're looking at 2.7 to 3.1%.
Goldman Sachs is 3 up, maybe up to 3.2.
Wow. Yeah. Okay. So it's looking very good, and we have productivity, and I think that's where we need to focus, right? We have had an extraordinary run of productivity, and the question is this the 90s redux, right? May the Fed only need to cut 100 basis points or 125 basis points instead of the full number of basis points they were expecting to get the economy to be on solid footing?
Can you see Lisa Mateo with like the Olivia Newton-John 90s look? Gwen and Blondie and all that. We don't want to go back to the 90s.
Constance, I mean, there's something for everybody. I mean, this jobs number today, whether you're looking at the 254,000 non-farm payrolls, the unemployment rate down to 4.1%, average hourly earnings annualized up to 4%, that feels like a really strong labor market. Are these numbers really reflective of what's going on out there?
Well, that's a good question, and I haven't had time to delve into the part-time versus full-time, which I always get, the tweets that the people at me like, oh no, it's all part-time jobs, the economy's falling apart. And so, I think in some respects, if you want a part-time job, that it's great that we have a labor market that's flexible enough to allow you to have one. But if you want a part-time job because you're taking care of an elderly parent or you can't find childcare, right? That is not an ideal economy. So we really have to dig down into these numbers. And look, there's always going to be things to improve. There's always going to be parts of the economy that need attention, right? And so yes, like there's always going to be people where we need to do more for, but by and large, this is a solid economy. And the question now is, are rates too high, right? Is the Fed still restrictive? and how much do they need to adjust and calibrate to be neutral? Like, does this jobs report allow them to be neutral? And I think, look, you don't want to take too much away from one print. You were right to look at the 6-month moving average, right? And it's solid.
Okay, dirty people say to me, stop me on the street. How do you do it? How do you do this parlor game? And the answer, folks, is I stole this from John Micklethwait years ago. You read a 14-page essay in the Economist magazine. I know you're writing a 14-pager right now on China. Constance Hunter on China. Go.
So I don't think the bazooka has very many bullets, or has enough bullets, and that's because there's no way to really have enough bullets when you are in a balance sheet recession, which is what China is in. They have had a massive, massive adjustment to their property market. And just to calibrate this for you, in the US before the global financial crisis, residential real estate was 6% of our GDP. We recalibrated, it's 3% now, okay? China's was 25%. Okay, so think about the magnitude of this recalibration. It is going to take, and we did stimulus, right, coming out of the global financial crisis, and it still took us a decade, really, to get back. And I think what probably jolted us into place was all the stimulus from the pandemic, right? And so to think that China's going to get over this in like a year, that's insane. The question is, how many decades will it take? Now,
they don't in a labor model and on protest in the hinterlands, Chinese ambassador to the U.S., Nick Burns, was out in Chengdu this week by train. Out there by train, they don't have time for years to fix this, do they?
I mean, it will possibly strain the social fabric. You have high youth unemployment right now. That's
19%.
Well,
it's
hard to
number.
Actually calibrate because they stopped publishing it.
Okay. What's that mean for the rest of the global economy? Don't we depend upon them to make stuff, to buy stuff, all that?
Well, yes. I mean, the U.S. economy is really a large closed economy in many respects. Trade, net trade is not a huge part of our GDP, and that's how we can be the reserve currency. We couldn't be the reserve currency if we were a small open economy because we wouldn't be able to withstand fluctuations in the dollar.
Good point.
Right? So, but Europe, we're looking to improve slightly, but that's from a very low base.
Okay. Please come back after you go to London and have the Big Mac at Liverpool Station to make the Big Mac Index go. I really want to talk to you about the Draghi model.
I would be happy to.
Mr. Macron with Stephanie Flanders this week. Macron was on fire.
I watched that interview. That was amazing. It was amazing.
But
yes, he did a great job, and she did a great job.
Fire about the Draghi. We haven't talked enough about the Draghi thing. Paul, I think it's you, me, Constance Hunter in Paris.
Yeah, we could do that.
I think that's must do. Must do radio.
Absolutely. Constance Hunter, thank you so much.
Thank
with
you.
EIU. The one guy who stayed on top of the story that's out there with the 8 other distractions, the horrific hurricane results that we see, all the politics of the moment. What are the candidates doing today, Paul, besides yelling at each other?
Yeah, I don't know.
I mean, that's it. We go to our expert, Joe Mathieu, with us with Balance of Power. Joe, if all of this foolishness wasn't going on, there'd be only one topic, which is, are we putting our military forces in harm's way in the Eastern Mediterranean? Are we applying military force to Iran this weekend?
Well, applying is an interesting word there. Defending, I suspect, is what the Pentagon would suggest. But yeah, we've surged thousands of troops into the region. And we have to remember that while this most recent attack by Iran against Israel brought defensive measures from a couple of U.S. destroyers, it was airmen and sailors who helped to knock down a couple of hundred drones and rockets from Iran back in April. So we do have to acknowledge the fact that there are American service members who are potentially in harm's way in our effort to defend Israel. This is why we're so worried about a wider war.
Bloomberg got a great map north to south on the Iranian border of where various and sundry targets are. From your sources at Balance of Power, what is the Pentagon considering in assisting Israel, or have they just said, get out of our way?
I think it's more get out of the way here, Tom. I don't think you're going to see the U.S. take part in an attack on Iran. But what form that attack will take remains a big question. People are assuming that we're talking about ballistic missiles, maybe some sort of ground incursion. But let's remember Stuxnet 20 years ago, almost at this point, Tom, could there be a cyber component to this that would allow Iran to say, hey, nothing happened here. They barely laid a glove on us, but in fact could instill some real damage if they tried again to attack, for instance, the centrifuges in their nuclear program. Getting to those bunkers deep underground and deep under mountains with munitions is a much taller order.
Joe, to what extent is the White House, the administration, frustrated, perhaps, that they don't have more influence on Netanyahu? He seems to be just kind of ignoring any and all calls for moderation over the last,
I'd say that's
several months.
It's probably a 10 out of 10 here, Paul. I don't know if the White House has any influence right now. The deteriorating relationship between Joe Biden and Benjamin Netanyahu has been widely noted, and weekly calls for restraint have not been heard. That's why we're on the precipice here, and a very concerned White House. If this coincides with our election in November, that's where Tom Keene started. We've got problems.
How are the candidates adapting the news flow? Folks, my basic theme here is if none of this was going on, there would be no other topic in America this morning, even the jobs day here in 37 minutes. Joe Mathieu, the Harris-Trump distinction on what we see in the Eastern Mediterranean.
It's all based on assumptions right now. People think that Donald Trump will be friendlier to Benjamin Netanyahu and Kamala Harris will not. But the fact of the matter is, if you look at the spoken words, the actual words that are used by Kamala Harris, they sound a lot like Joe Biden. Look, we talk about October surprises. This is like the October slog. We've got 3 of them going right now because that dock workers strike isn't over yet, guys. They still have to figure out the automation component. All 3 of these could bend the race in one direction or the other as we're sitting here in a 1-point race in the states that count.
Well, so on that race front there, when we have a lot of news data points, as you point out, Joe, I mean, Liz Cheney endorsing Kamala Harris. What does that mean for you folks in Washington?
I'm not sure if it means anything. It's a heck of an optic to think that these two who don't agree on a single political issue are sharing a stage together like this. She said she's been a Republican her whole life since before Donald Trump started spray tanning. And so this ought to mean something. But does that take people out of the mushy middle here one way or the other? I don't know. Look, they're trying to do anything they can to get every vote that counts.
I mean, balance of power is extending to a 6-hour broadcast here on a Friday. Matthew's not going to walk out of the building till 8 p.m. Away from the Eastern Mediterranean, what's your number one topic as you and Kaylee plan the day?
I'm watching Georgia today, guys. Donald Trump and Brian Kemp. Are you kidding me? Remember, Donald Trump called him a bad guy and an average governor. Today, they're actually going to be together in Georgia as they were both invited to get an update here on the storm damage. Maybe they'll break bread. I don't know. But he's got Elon Musk covering him in Butler this weekend. So Donald Trump's keeping company with some interesting folks.
Well, this news on the dock workers, Joe, I mean, I guess if you're President Biden and you want to, or Kamala Harris, and you want to wave that around, that's got to be a net positive on the margin.
For sure. As I mentioned, though, they still have to work out the automation component. But yeah, they just took a big problem off the table, at least between now and November. And Kamala Harris, interesting, they each kicked out their own statements last night. You see that? It wasn't just from the White House. You got one from Joe, one from Kamala. They essentially said the same thing. She's calling for fairness and acknowledging the power, as they say, of collective bargaining. But that's not something that she wanted to answer to between now and November. And it could have, as you well know, caused a massive economic interruption. That doesn't help the price of oil, though, guys, which brings us back to this story in the Middle East.
I mean, Joe, I mean, he's got a clock embedded in his neck. You know, he got surgery done at Mass General.
You have one of those too, I think.
You know, it's October 4, which I'm going to say is 31 days to joy. What's the breathlessness of the two campaigns right now?
The breathlessness
the immediacy,
is really
the shortness of it all.
Look, I think that normally we'd be gearing up for another debate right now. I've heard you talk about this gap between the vice presidential debate and actual election day. That's real, which gives these campaigns a little more time, I guess, to spend money and get ready for closing arguments. But I'll remind you, people are already voting. And that's what matters right now, including the two states that were ravaged by this storm. And I wonder what that means for turnout.
Yeah, I talked to Mike McKee, Joe Mathieu, and we both decided we're so permanently scarred from 1986 that we can't get it on for the Amazons. Were you able to watch the Alonso home run last night?
I still have my 1986 bumper sticker on my guitar case, Tom, which is something that someday I hope I get a chance to show you.
That would be good. Joe Mathieu, thank you so much.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.